Today in the grain market, we see some red on the board with soybeans making another new low. Those crop ratings were on the decline. I mean, demand is on the decline as well. The futures started 22 higher, but just couldn't hold. Technically, we're a long way from filling that 17-cent gap from yesterday opening. Now, that market was at 13.75 to 13.91. That's an awfully big gap to fill, but technically we're going to be looking at that a little bit later. Today's range was from 40 cents from 13 to 13.40. November's option open interest in calls and puts was kind of way up. Right now, the highest open interest is in that $17 call with 20,000 contracts. On the put side, it's the $13 and the $14 call each each with 12,000 open interest. That's something to be watching as we go forward. Now, the CVOL is up to 32.3% on the soybeans. The oil's up 3 3/4 to 40.9%. This is the first time it's been up over 40%. So a lot going on in the soybean complex as a whole. The meal was up just 3/4, but it's still at 32.9%. So that's an awful lot. And basically, from the market really coming down so hard, we knew that the CVOL numbers were going to start to catch up, and so we see that happening now. Now, the corn today was a little bit mixed. There's really concern about the global recession, and that really is kind of infiltrating into all the commodities right now. Again, their crop ratings were down as well. Demand too. Futures did pop up a little bit, but consider that we are 80 cents lower in just a week. I think risk management tools are in demand right now. But technically, the market did have a little bit of a small gap down yesterday from 602 to 604.5. At some point in time, that's going to be filled, so that's something to be watching out for as we go forward. The futures did extend a little bit lower as well, so we can see that the market still has some pressure on it. The DEES option open interest was had some sizable liquidation to mention. 8,000 contracts on the calls from mostly the $8 and the $10 calls. That is still like the highest open interest, though, even though we had some liquidation. There also was liquidation of 7,700 puts. Now, the highest one is the highest open interest on the put side is the $6 puts. So while those are pretty sizable liquidation, it just looks like everyone's kind of moving to the sidelines to see what's happening as we move into the middle of summer. The CVOL is up 2.5% to 44.5, and of course, as we say, with an 80-cent move in a week, we knew that CVOL was going to be catching up. The wheat is still falling right now. That improved weather is just adding more to the future sell-off. 55-cent range today, breaking through the $8 support level. That's something to watch going forward. We didn't close there, but something to see. We're down a full $5 just since May 17th's high. That's kind of a huge move that I haven't really seen in many, many years. The entire premium from the Ukraine-Russian war is basically gone, with the September option open interest up 6,000 calls, mostly in the $9 and $10 calls, which is the high. Also buying of $8 puts, maybe about 1,000 there. That's also the high. So we've got this $8 put to the $9 and $10 calls. That's a pretty small range. For the option open interest, something to watch. Now, the CVOL is also up 2% to 48.2. We're getting back to that 50% mark where we had been for quite a while in that wheat market. But today, the U.S. dollar hit a high that's well over $106. And that's just really based on the economic downturn in Europe. I think that's definitely impacting our markets as we go forward.